Welcome back, everyone, to the Deep Dive, where we break down the global issues that matter most for your UPSC exams.
That's right. We're focusing on giving you the clarity you need to really ace those exams.
Absolutely. And today we're tackling a big one, the U.S.-China trade situation. It's 2025, and things are, well, let's just say, interesting.
Interesting is one word for it. Yeah, things are getting pretty tense between the two economic giants.
Definitely. And we're going to unpack all of this using some recent analysis from The Hindu. So, as always, if you're following along, you can grab that article.
Yeah, we encourage you to read along with us. It always helps to have the source material handy.
For sure. Okay, so right off the bat, we're seeing some major moves from President Trump. He's gone ahead and temporarily suspended most tariffs for 90 days.
Right, and this seems to be linked to some kind of global market crisis that's been brewing. It's not totally clear yet what the specifics are, but it seems serious.
Yeah, and what's really interesting is that alongside the suspension, he's also gone and drastically increased tariffs on Chinese imports specifically.
Yeah, up to a whopping 125%. It's a huge escalation from what we were seeing before.
It definitely feels like what started as a kind of general trade friction is now becoming a very direct head-to-head between the U.S. and China.
You could definitely interpret it that way, and it's a fascinating shift because remember, the U.S. was initially aiming for this broader tariff strategy targeting multiple countries.
Right, and now it looks like they're kind of narrowing their focus and really zeroing in on China specifically.
Exactly, and for the other countries caught in the crossfire, well, they're now looking at a much lower 10% tariff.
And the U.S. is signaling that they're open to individual negotiations with these countries, which is a big change from before.
It really does feel like a strategic reset, you could say.
Absolutely. And you know what? This brings up a really crucial question for all of our listeners out there who are prepping for the UPSC exams.
What's that?
Well, with all of this back and forth and with tensions rising like this, there's a very real possibility of this turning into a full-blown trade conflict.
Oh, absolutely. We can't ignore that possibility. And it's something you should definitely be thinking about as you prepare for your exams.
Exactly. We're talking about the potential for tariffs to go even higher, potentially exceeding 100% on Chinese goods.
Yeah, we're not talking about a simple trade disagreement anymore. This could be a full-on trade embargo, a total freeze on trade between these two economic powerhouses.
And that's something that could have massive ripple effects throughout the global economy. It's a huge deal.
Especially given how interconnected the world is right now. Think about all the supply chains that rely on trade between the U.S. and China.
It's mind-boggling. If those links are severed, it could lead to disruptions and shortages all over the place.
It's like a domino effect.
Yeah.
It's a scenario that UPSC aspirants should definitely be familiar with because it could very well come up in your exams.
Absolutely. And it all boils down to this really crucial question. Will these really aggressive tactics ultimately hurt China more than they hurt the U.S.?
That's the billion-dollar question, isn't it?
Yeah. It really is. And unfortunately, there's no easy answer. The long-term consequences of this kind of economic warfare are incredibly difficult to predict.
It's a huge gamble, and there are so many factors at play. The resilience of each economy, the reactions of other major players like the EU and India. It's a complex web.
Absolutely. So to kind of ground ourselves a bit, let's take a look at some of the hard numbers from 2024 just to get a sense of the scale of trade between these two countries.
Good idea. It always helps to have some concrete data to work with.
So in 2024, the total trade between the U.S. and China was a staggering $582.4 billion.
Wow, that's a lot of money.
It really is. And if we break that down a bit further, U.S. exports to China amounted to $143.5 billion.
But that actually represents a slight decrease of about 2.9% from the previous year. So even before this latest escalation, things were already trending downwards.
Interesting. And on the flip side, U.S. imports from China rose slightly to $438.9 billion. That's an increase of 2.8%.
So the trade deficit, the gap between imports and exports is widening even further.
Exactly. Which brings us to the big talking point. The U.S. trade deficit with China, it sits at a hefty $295 billion.
It's a huge number, and it's one that gets thrown around a lot in political discussions.
Absolutely. But for you UPSC folks out there, it's really important to put this figure into perspective. Yes, it's a big deficit, but it represents roughly 1% of the total U.S. GDP.
That's a crucial point. It's easy to get caught up in the rhetoric and think that this deficit is some kind of existential threat to the U.S. economy, but the reality is more nuanced than that.
Exactly. It's all about context. And for your exams, it's important to show that you understand the bigger picture.
Definitely. Okay, so we've talked about the U.S. side of things, but of course this is a two-way street. What's China's response to all of this?
Well, it seems like they're not backing down. They've made it clear that they're willing to fight back.
They've actually vowed to fight to the end, which is pretty strong language.
It definitely shows that they're not going to be intimidated, and they've already started implementing their own retaliatory tariffs on U.S. goods.
So this is very much an escalating situation with no clear end in sight.
And it's important to remember that both sides are dealing with their own internal political pressures and calculations.
Absolutely. For the U.S., you have to consider the upcoming elections and the potential impact of this trade war on voters.
Especially those voters who rely on affordable Chinese goods.
Exactly. And on the Chinese side, President Xi Jinping has to be very careful about how this plays out domestically.
He can't afford to be seen as weak or as giving in to U.S. pressure.
Right, and this is where the whole issue of face becomes really important in Chinese politics.
Absolutely. Okay, so let's shift gears a bit and talk about the immediate consequences of these tariffs, specifically for the U.S. What are some of the things that we can expect to see?
Well, one of the most obvious impacts is going to be on prices for consumers. A lot of everyday goods are going to become more expensive.
Things like clothing, shoes, electronics, all of those things that people rely on could see significant price hikes.
And that's because those tariffs essentially add a tax to imported goods, which businesses then pass on to consumers.
And the thing is, the U.S. is actually quite reliant on China for a lot of these goods. So finding alternative suppliers isn't always easy or cheap.
That's right. And it's not just consumer goods. We're also talking about things like critical drug ingredients.
And rare earth elements, which are essential for all sorts of high-tech industries.
So the U.S. could find itself in a tough spot. Either they have to pay more for these essential imports, or they have to scramble to find new suppliers.
Which could take time and might not even be possible in some cases.
Right. And all of this could lead to a decrease in consumption, as people simply can't afford to buy as much as they used to.
It's a tricky situation, and it's not clear what the best way forward is.
And to make things even more complicated, it seems like the U.S. is pursuing a bit of a two-pronged strategy.
How so?
Well, on the one hand, they're trying to engage with countries in China's neighborhood.
Places like Japan, South Korea, India.
Exactly. The idea seems to be to strengthen those relationships and maybe even create a kind of united front against China.
Sort of a way to put pressure on China without directly confronting them.
That's one interpretation. And at the same time, it seems like they're putting direct negotiations with Beijing on the back burner.
So it's a mix of engagement and containment, you could say.
Yeah. And it'll be interesting to see how this plays out because it's not clear if China is even interested in negotiating at this point.
Right. They're feeling pretty defiant right now, and they see this whole thing as the U.S. trying to bully them into submission.
Exactly. And that makes it very difficult to find common ground.
Okay, so we've talked about tariffs, but it's important to remember that this trade conflict is about more than just those specific taxes.
Absolutely. There are some deeper underlying issues at play here.
The U.S. has long accused China of currency manipulation.
Basically keeping their currency artificially low to make their exports more competitive?
Right. And they've also raised concerns about non-tariff barriers.
Those are all the other ways that China makes it difficult for foreign companies to do business there.
Things like regulations, licensing requirements, all sorts of bureaucratic hurdles.
It's basically a way to protect Chinese companies from competition.
And it's something that the U.S. has been pushing back against for years.
Okay, so we've got this complex trade war with tariffs and non-tariff barriers and all sorts of political posturing. But at the end of the day, it all comes down to leverage. Who has more power in this situation?
Yeah, that's the key question, and it's a tough one to answer because there are arguments to be made on both sides.
On the surface, it looks like the U.S. has more leverage simply because they import so much more from China.
Right. In theory, they could just stop buying Chinese goods, and that would put a huge dent in the Chinese economy.
But in reality, it's not that simple. The U.S. economy is also very reliant on those cheap Chinese imports.
And finding alternative suppliers would be costly and disruptive.
Plus, there's the whole political dimension to consider. American consumers and businesses would feel the pain of those disruptions.
And that could lead to a backlash against the government.
So the U.S. can't just wield its economic power recklessly. It has to be strategic.
And on the Chinese side, their economy is heavily dependent on exports.
So in theory, they're more vulnerable to U.S. pressure.
But they also have some advantages that the U.S. doesn't.
Like what?
Well, for one thing, they have a more centralized political system.
That means they can make decisions and implement policies more quickly and efficiently.
And they don't have to worry about things like elections and public opinion in the same way that the U.S. government does.
So they have more freedom to play the long game.
Exactly. And they're also investing heavily in domestic consumption.
trying to reduce their reliance on exports and create a more self-sufficient economy.
So even if the U.S. tries to isolate them, they're preparing to weather the storm.
And they have a huge domestic market to fall back on.
Exactly. So it's a really complex situation with no easy answers.
It's a classic geopolitical chess match.
Absolutely. And one of the most worrying things about this whole situation is the fact that tariffs tend to be very sticky.
Once they're in place, it's very difficult to get rid of them.
We saw this with the tariffs that Trump implemented during his first term. They're still in effect, even though Biden is now president.
And there's a lot of pressure from various interest groups to keep those tariffs in place.
Businesses that benefit from the protection, farmers who are worried about foreign competition, and so on.
So even if the economic rationale for the tariffs fades, they can become politically entrenched.
And that can lead to a long-term distortion of trade patterns,
which ultimately hurts everyone in the long run.
Okay, so let's wrap things up here with a few key takeaways for our UPSC aspirants.
What are the most important things for them to remember?
Well, first of all, this is a very dynamic and fluid situation. It's constantly evolving, so it's crucial to stay up to date on the latest developments.
Read The Hindu. Follow other reputable news sources. Pay attention to what's happening.
Second, this trade war has the potential to have a huge impact on the global economy and on India specifically.
So think about the implications for Indian businesses, for Indian consumers, for Indian foreign policy.
How might India position itself to benefit from this situation, or at least to minimize the negative consequences?
Those are the kinds of questions that UPSC examiners love to ask. So be prepared to think critically and strategically.
And finally, remember that this is not just about economics, it's also about geopolitics.
The U.S. and China are vying for global influence, and this trade war is just one manifestation of that rivalry.
So as you study this topic, think about the broader implications for the balance of power in the world.
And how might this all play out in the long term? What are the potential scenarios?
Those are the kinds of big picture questions that will really impress the examiners.
All right, so we've covered a lot of ground today, but hopefully this has given you a better understanding of the U.S.-China trade situation.
And how it relates to your UPSC preparation.
And as always, if you have any questions or comments, feel free to leave them below.
We love hearing from you, and we'll do our best to respond to everyone.
Don't forget to like and subscribe to the channel for more deep dives into important global issues.
And be sure to check out The Hindu for more in-depth analysis of this topic.
Thanks for joining us, and best of luck with your UPSC exams.
We'll see you next time on The Deep Dive.
Bye for now.
Bye, everyone.